Hi, everybody. How are we doing? I hope you're doing really well on this Friday. I'm excited for it to be the end of the week, although I'm not really taking a break. I've got some important things to do, and they're things that I love doing. I'm okay with it. But we're not here to talk about plans and social calendar. We're here to talk about green finance. And why this is a really important topic is because, let's face it, money makes the world go around. And that's not a bad thing. Money is energy and it is currency, and it is shifted through time. It has allowed us to do so many incredible things, not only as individuals and with our lives, but as business systems, as social systems, as national and global systems to build these thriving economies that we're starting to see today. So money does, it makes the world go round, and green finance is becoming a really important topic for businesses to consider, especially if the businesses want to be considered as being sustainable and doing the right thing. But really, let's get down to what green finance is, right? So green finance is essentially the flow of money, the flow of financial metrics through banking, credit systems, insurance, investment, across all of the areas like public, private, not for profit. So, really, this flow is supposed to allow for more sustainable development priorities. And that's really the idea behind green finance. So, just FYI, if you're joining me live, I'm just checking if anyone is, and there's a couple of you on, so say hello, don't be shy. But really, green finance is important across a few different areas. So it's, sorry, my computer, everything seems to be going slower than that's okay. The idea of green finance is that we want to be able to leverage the money that is flowing through our economy and use it for obviously more sustainable development, drive, environmental benefit and social impact in a positive way, and just increase the accountability of money as it flows through our economy. And so some of the areas that green finance really touches on is about enhancing market practice within businesses, harnessing that balance between the public sector, the private sector, not-for-profit sector. It's really about upgrading the way that we govern our businesses, the way that we govern our society, and how we interact with each other through the economy. So it's promoting a lot of positive things, and without the money being leveraged effectively for this sort of positive change, then businesses, not only are they putting a risk on their reputation at the very first level, when climate change starts to impact their business operations, starts to impact their supply chains more and more, which it will, we're already seeing that it is, the business is left kind of high and dry because they don't have that leverage within their business. They don't have that financial backing or that financial system of support within their business because they've sort of left themselves open to too many risk factors. So there's a lot of reasons why this is important. And just as a simple example, as climate change impacts start to impact our society more and more, it obviously will disrupt supply chains and business operations and can actually directly destroy your business site, maybe your warehouse or your manufacturing site or your office space, whatever it is. And then when you go to the bank or when you go to the insurance, the policy holders for your business, and you say, hey, I want some money to fix up my business, that's not going to be as easily available as they start to become stricter about assessing how well is your business considering climate change, how effectively is your business responding towards climate change, and what sort of risk mitigation have you put into your business operations? Because if you haven't, then they can see you're obviously a risk factor, you're a liability to their insurance company, and you're going to be less likely to get that money to fix your business, to fix your site that's been destroyed by some sort of climate adverse event. So really there is kind of a lot of moving parts to this, but really the idea is, how do we start to essentially follow kind of like TCFD principles? So if you don't know the TCFD, it's the Task Force on climate-related financial disclosure, bit of a mouthful. And then there's the TNFD as well, which is around nature-related financial disclosure. But the idea is look at the climate risk within your business, quantify that, assess it, that sort of thing. Identify where it impacts your financial systems within your business and your broader business ecosystem, and then look at climate mitigative or the impact of that, like mitigative actions that you can take to address those impacts. So there's steps to it, and following that sort of those general principles can start to help your business reduce your risk and be less of a liability and be more positive as a player in this kind of green financial system, this green economy that we're seeing emerge. So that's it. Just a little short snippet that I wanted to share with you all today. Thank you for joining me live. I appreciate it. And I do hope that you have an incredible weekend. Take care of yourselves and hope to talk to you soon. Bye.